I did kind of the weirdest, riskiest thing 8 years ago that people told me I was crazy. And hey, you shouldn't be allowing people to invest online in entrepreneurs they haven't met. And mostly that's worked out well. I think the industry has evolved and avoided some of the pitfalls, i.e. fraud, widespread, although of course there's some of that in investing. And you know, if that wasn't crazy enough, then I found myself surrounded with a really interesting group of investors that I've worked with. A lot of them were building and investing in early companies on the blockchain. And I woke up kind of literally a year and a half ago, and I saw they were all doing something called cryptocurrencies. Who here is familiar with cryptocurrencies? Okay, so most of you, cool. And I was like, wow, most of the smartest people I know, especially in this one space, are all doing this. Okay, I'm missing the boat. What is this? So I'm going to talk a little bit about what's happening in that market. You've probably heard about ICOs as a fundraising tool. I've been involved both on the building, starting, and investing side of that over the last year plus. I co-founded a company called CoinCircle, which does end-to-end tokenization, which is a fancy way of saying if you're a company, you don't necessarily have your company on the blockchain and you're interested in doing an ICO or token sale, we would take you from start to finish, from design and conception of that token to structure to financing to marketing. So I've kind of done all the pieces. I'm going to give you a little bit of overview of what this is. I think you might know that it's a fundraising tool that happens on the web where people are investing or building cryptocurrencies. There's a lot more to it, and there's a lot of strategy, and it's also not a fit for everyone. So I'll start to say there's a few different types. And just generally, by the way, so you have a sense of scope, I think it's getting close to 3.5 billion raised in ICOs over the last just over a year. And the market's been growing. It's fairly volatile. It's been up and down, but generally very, very much up. I posted on this on my Forbes blog as well, so you can read a bit about the data and how some of it works. There's generally 3 types of tokens, and if we really got into it, there's probably about 20. But I'll boil it down to you and say, of ICOs, when people do an ICO, they're building a cryptocurrency token that people are purchasing or agreeing to purchase. And those can have 3 general flavors. The first is called a utility token. So this is not a security. It is not a promise for equity or any ownership or return in a company. It is a token that can and should be used for, say, payment for software service. So I'll give you an example. A friend of mine, and sometimes these things are a little nebulous or technical, so I'll try and bring it down to earth. A friend of mine has built a virtual private network, a VPN. Are you guys familiar with what VPNs are generally? It's a way of browsing the internet in a more private way and secure. And you can hide some of your identity. So a friend of mine built a tokenized VPN. He launched a cryptocurrency token so that instead of you just connecting to different servers that centralize this experience, he built a VPN that was really owned and peer-to-peer, so that anyone who downloaded this server, this VPN software, could both use and pay in the token to get access to this network, a software network, or receive it for relaying internet access to other VPN users as a network. So what this does, at the heart of what utility tokens often are, is a distributed software network that instead of using cash, where say you bill and pay for software using Stripe or whatever it might be, where you have a credit card, say on Skype, instead you can own and pay in a native token or currency to this network, and the entire community owns and can share that and can benefit from it. Which is in part why oftentimes they're not considered a security. So that's one type, a utility token. Second type is a security token. So the very first security token was actually a venture fund. Blockchain Capital, a friend of mine, took a portion of his venture fund more public by tokenizing it, allowing people to buy fractional ownership in that VC fund using a token. Now, why would he do that? Well, tokens can and do provide a different type of liquidity. And so I don't have time to go into all the details about exactly how that works, but that's true for utility tokens. It's true at some point for securities tokens, and it can also be true for the third type, which is an asset-backed token. So an example of an asset-backed token would be a token that's backed by the asset of, say, gold. There's, I think, BitGold out there and a few others. So people are tokenizing all kinds of things. With that as a very general understanding of what the types are, I want to explain really at the heart of what it's for, because I get a lot of people coming to me asking, interested, saying, should I do an ICO? Should I have a token? How can I raise money this way? And the first conversation I really have with everyone is the fundamental question, which is, how is being on the blockchain and how is having a cryptocurrency token the best thing for your business? That's the very first question to ask. And it's not a simple answer, but that informs everything else that you should do. So I'll give the answer to that in a context. I think there's, and to simplify this for those who aren't as familiar with different types of tokens or haven't seen ICOs in the wild, an example of one that could be interesting would be the example of tokenizing, say, Uber. If you ask the question, could it be interesting to move Uber onto the blockchain and give it a token, my answer would be very likely maybe. And I know that's like kind of hedging. But what's interesting and why I feel like it's interesting and I wouldn't say it's a bad idea is because a blockchain technology, which is at the heart of a token, is really about servicing and catering to a decentralized or disparate community. It is the opposite of the standard architecture of what we usually have in our online businesses and our online services and our banking and everything else we do. The traditional model is that we centralize storage of data, of information, and authority and control over that data and information, i.e. how much money you have in your bank account. A bank centralizes that in a server and then promises and is the authority to that. What the blockchain does is turn that completely on its head and say, no thank you to a centralized authority. In fact, I don't trust that. I trust a giant network of hundreds or thousands of people that are all, instead of one centralized authority, the group through consensus agrees and is the authority through what are called consensus algorithms or protocols. So I'm not getting that crazy on you, but I'll say it's a peer-to-peer model to decide to do accounting, to use what's called distributed ledger technology, to agree on transactions, and to do that in a decentralized and peer-to-peer way. I'm a believer in the world that there are some good examples and good reasons to have a centralized trusted authority. And I'm also a believer that some really bad things happen, especially in finance and in banking, where you think you want to have a lot of trust, where this model can actually be more trustworthy, given the right security protocols. The reason I believe that is because it's more transparent and it's more auditable, meaning I can't go in and force a change. I can see every transaction that's happening, just like anyone and everyone else, because it's distributed and it's based on a set of decentralized people who are all getting copies of the same ledger of transactions. Have I thoroughly confused everyone, by the way? Okay, good. I haven't. I tried. I really tried. I promise. So let me draw the really simple example, and then I'm going to go through a tiny bit about how ICOs and token sales work, if I haven't scared you off completely from them yet. One cryptocurrency that everyone knows, which is kind of the brand name, is Bitcoin. So I'm sure everyone is familiar with Bitcoin. Who holds Bitcoin here in the room? Oh, there's like almost no crypto users. I'm surrounded by crypto all the time now, so it's actually kind of nice to be in a room without it. 2 minutes. Okay, I'm gonna go really fast. Then I'm gonna skip this. I'll just say that Bitcoin is a very simple blockchain-based system, and it runs on this decentralized framework that I was talking about. And by adding an incentive, i.e. a token, people agree to share value, and there's a value put on that, i.e. Bitcoin has a value. Well, that model has evolved since 2012, roughly, when Bitcoin launched, and people evolved that underlying blockchain to be a lot more intelligent and a lot more flexible. And what they've done is give it the ability, say with Ethereum, if you've heard of Ethereum, is to program on top of that network to do what you would call smart contracts. So now not only can you have this distributed technology, you can program things to happen conditionally based on, say, if X condition happens, let's say my startup gets to 100,000 subscribers or users, then Y condition automatically happens. And you can program that into the software, and that can then automatically have things happen like distributing tokens. These are called smart contracts. They are starting to automate and revolutionize a lot of the things that we do as transactions, banking, real estate, finance, and that will continue to happen. So this whole area of programmable money is coming, and that's in part what part of the values of ICOs are. They're not just to raise money, they're a fundamental business model change with an incentive model where financing is put on top of that in order to scale that new network. So to do an ICO, there's a few things. First, you want to ask that fundamental question, why is the blockchain and a token the best idea? The second is you're going to have to think about and work with people who understand the mechanics to help you design either a utility or a security or an asset token, which takes some knowledge about the space. There are groups and service organizations out there that do this. The next thing you'll do once you have a sense for the design and mechanic for that token and how it might work is then you actually have to code it and build it into a product. And then you would then arrange for what's called an ICO or a token sale, and you would start selling that out. What we saw over the last year is there was a huge amount of funding coming from the general public where people were buying, say, with Bitcoin or Ether, a lot of these tokens. And there used to be a small amount of that money raised in what's called a pre-sale. That has completely changed, even in the last 3 months, from almost none of the money being raised in this more public crowd sale or crowdfunding with crypto, and now it's almost all accredited investors investing to own the future tokens. So I also have more about this on my blog on Forbes. I wish I had a little bit more time. I can try and be a resource. You can find me online, and I really appreciate being here with you. And good luck with any of your fundraising.
We have time for a couple questions, and I do want to also ask you. You mentioned that there are resources out there. So could you name a bunch that people might want to look into?
Well, start familiarizing yourself. If you're going to look down this whole road, you need to just understand what tokens are and what they do. Go to coinmarketcap.com and you'll be overwhelmed by the number of tokens. There's probably 1,300 in the world today, and there's permutations for all types of industries and purposes. Go there and just start to educate yourself. Check out my blog on Forbes. I would start reading CoinDesk, which is kind of a large news publication that talks about this entire blockchain and crypto industry. It's kind of the tech crunch for this world. So you'll get to know who some of the players are. You'll see some of the leading technology and services companies. And then there's a lot of meetups around town. There's the LA Ethereum meetup. It's a meetup group here in LA. Go and start talking to people about this because it's a big rabbit hole. You'll find out if you're just learning that 3 months from now, you're only halfway down the rabbit hole.
I'm an engineer, so I've been since this began, and I've seen all the various different variety of schemes. In the first episode, we talked about the legalist setting up so that you don't have to be an informed investor in order to do crowdsourcing with equity. So the government has done that. And have they done that with Bitcoin, or they don't look at it as a big disruptive force and the speculative portion of, kind of reminds me of, although I was not there, the tulip market?
So I'll jump on your last point first, which is it's a bubble. And anyone says it's not, it's crazy. I just happen to like bubbles because that's where a ton of value is created, and that means you have hyper growth. You can make a lot of money, you can create a lot of real value in a bubble, and it can also crash and a lot can be lost. So I don't have problems with bubbles. I have problems with things that are valueless that get valued. That said, yes, people are doing non-accredited crowdfunding, and there's tokens that are using things like the Regulation A+ framework to raise 20 to 50 million with non-accredited investors through a token. Those are a bit new. The SEC is paying special attention to those, so you'll attract a little additional scrutiny, but you'll still have to go through the process of, say, 6-month registration if you want to get it approved on a federal level. These things take time. So ICOs aren't like a fast forward roadmap to quick money, although I think it seems that way to people because the raises happen and they're so big so fast. That'll be an area of innovation where marrying more of the Jobs Act with more on the tokenization side will start to happen, and there's platforms working on and building that. I'm excited for that. We'll see. I've spent some time in DC again over the last 3 months, talking to former commissioners, a few people on the SEC commission. It seems like they've been a little bit hands off to say, we want innovation, but we're really concerned about bad actors and people doing things that don't make sense, lying, promising returns, things you should never do anyways. So they're coming down hard enforcing bad actions, but they're not banning cryptocurrencies. And in fact, they know there's a way and they want to keep this innovation happening. So I think there's an interesting roadmap ahead, but it'll be more regulated soon.
Hi, I'm Rick Ryba, CFO of Blue. We do a Bluetooth-enabled mobile point-of-sale system. And I have a couple quick questions. First, okay, related. First, just so I have it right, if I'm talking about loyalty programs and loyalty points, that's a utility token? Potentially. And what would you say to someone that's developing a loyalty program with third-party vendors? What would be some of the challenges, advantages, and disadvantages of doing that through blockchain versus a traditional points program?
The bigger problems, like agreeing on the value, the redemption value discounts, it's actually programmable in blockchain technology. Like say you could build on Ethereum. That's a simplification of rewards, and then they're available to people and they own them. I think that's interesting. I think the challenge in the loyalty rewards is the redemption piece. So how are you allowing someone come? How do they hold that token, and then how are they redeeming it? And if you have, let's say, retail partners, how are they accepting that, getting the data? How do you actually do that transaction? And that requires hardware and wallets. And so you have to think that through and solve that last mile of transaction. And I think that's actually the bigger piece, not can you tokenize loyalty rewards and build smart contracts? That's pretty clear. That's efficient and more efficient and kind of easier. It's the last mile transaction that I think is the harder part, but maybe you're already solving that because you're right there with a phone on Bluetooth. So send me an email.